Welcome everyone to our coffee chat of the month. My name is Lautaro Musiani. I'm a project manager here at PCMI, and I will be hosting our chat today. Fernanda usually does it. She'll be joining us in a few minutes. But yeah, Valen, if we can go to the next slide. And the next. So as we usually do, just a few guidelines, so we can have a very good coffee chat. Just a reminder that it's an open event, and we love to see participation. So if you can, have your cameras on, your microphones ready for any questions or comments you would like to make. Also, feel free to use the chat. And as always, we will be recording this session. So anything you say, will be public, as we will be sharing the slides and the recording on YouTube on our website. So great, Valen, if we go to the next slide. Okay, great. So for those who've been, joining our coffee chats for the past few months, you will see there's been a bit of a pattern in our themes. We've been talking a lot of around crypto, and we will continue down, this same path today too. So I would like to introduce today Julian Bachelet. He's currently leading product and partner marketing at Mercuryo. He has a lot of expertise in Web3, DeFi, crypto, and before joining Mercuryo, he led the partner marketing division at Rootstock Labs, and he also drove growth initiatives at Magpie Protocol. So, Julian, thank you so much for being here today, and yeah, I'll give you the floor.
Hey everyone, thank you, Lautaro. Nice to meet you, everyone. Thank you for joining today. And yeah, I'm really excited to walk you guys through a little bit of Mercurio's story, not just what we do as a company, but also where within the industry is heading, and why we like to think that the next phase of crypto adoption is going to look different from the last one. Before we dive into that, let me give you some context on who I am, so you have an idea of
the phone on the call.
Sorry? No, we good? All right. Let me give you some context about myself. A bit like Lautaro said. Been working in marketing for over 15 years now, and the past 4 years specifically in Web3. I'm currently leading both the product and the partner marketing functions for Mercuryo. Before I joined Mercuryo, like Lautaro said, I was leading partner marketing for Rootstock Labs. Rootstock Labs is the main contributor to Rootstock, the first Bitcoin layer 2 chain founded in South America. And previous to that, I was leading marketing for Magpie Protocol. Magpie, it's a cross-chain liquidity aggregator that's VC funded by Jump Crypto. Previous to my Web3 career/life, big names for Mbobo, super traditional places to work on marketing and to set the foundations of my career. But after the past 4 years, I don't see myself going back to any Web2 projects, to be honest. I got into blockchain at the same time that I was doing an MBA. I was coming from a very soft background, such as communications. And while I was doing the MBA, I discovered finance and I fell in love with it. And at the same time that I discovered finance, I discovered DeFi, which was one of the main narratives of the previous bull market. And I started studying blockchain at the same time I was doing the MBA, which is something I don't recommend anyone doing at the same time, to be honest. But yeah, I fell in love with DeFi. I went down the DeFi rabbit hole, and I knew right there that I wanted to work in Web3, and that's when I joined Magpie as soon as I finished. I would like to invite you guys for this session to be as conversational as possible. So feel free to drop any questions or thoughts as we go. And then from time to time, I'm going to drop a few questions or a few things for you guys to take as insights, or at least to have a think about what we're seeing in the space. Next slide, please. Okay, next slide. And there we go. So at Mercuryo, our mission is pretty straightforward, I would say. What we're doing is we bridge in that traditional finance and the crypto economy, the way we like to think about it. And actually, in practice, what that means is that we help users and businesses to move their money seamlessly, and regardless of that money being fiat or digital assets. The idea for us is that the users can do that with the same level of security, speed, and simplicity that they would expect from any mainstream financial service. But there's a catch there, because despite of crypto being actually a multi-trillion-dollar industry, most people don't experience it the same way. And something that we're seeing is that the user experience is still far too complex, too unfamiliar, too disconnected from everyday needs. And if you think of it this way, our data is showing us that actually only 12% of adults in the US have used self-custodial wallet. And when we deep dive into that 12% of adults, most of them are still in the innovator, or either in the innovator or in the early adopter category of a new technology, like it's like Web3, for example. Next slide, please. And then, in my opinion, one of the reasons why this space is so exciting is that the size and the growth trajectory that we're seeing on the market, it's incredible. It's ridiculous. As of today, crypto, it's a 3+ trillion asset class, and we've seen between double and triple this size over the past few years. But at the end of the day, what's even more interesting than that is that the adoption curve, it's mirroring the early days of the internet. So if you think about what that means, actually, and this is a phrase that you will hear a lot in the Web3 space, is that we are still early. And we like to believe that the infrastructure that is actually being built today is the infrastructure that will define the way of how billions of people will interact with money over the next decade. But then there's something relevant here, right? It's just growth is not only about the number of wallets or the size of the market, at least the way we see it. For Mercurio, it's about who is coming and how, at the end of the day, are they using these tools. And one of the stats that are always surprising for us is that wallet adoption, for example, it's heavily pointing toward higher income groups. For example, if we take people earning under 40K a year, only 6% of those are using crypto, while nearly 20% of those, about 100K a year, actually are using it. So what that number is actually telling us, or the interpretation that we do of that number, is that we still haven't solved the accessibility in which the foundations of crypto as an ethos was created, right? We still very far away for that. If we consider that only 6% of people using it, it's 104K, and we're seeing the higher usage on people earning 100K or more a year. Next slide, please.
Juli, I have a question.
Yeah.
Here in this part of the adoption, right? Do you see any differences between the regions like, I don't know, Latin America compared to Europe in terms of where the main flows are coming of like crypto, like or like fiat money from moving from the traditional side to blockchain to Web3? Do you see any differences in terms of how adoption is like moving forward, and if some regions are like accelerating more like that adoption in terms of the flows from where are coming?
Yeah, absolutely. Great question. Something that we're seeing is that depending on the market, it really changes the use case. And I think that's related to your question. Examples like Latin America, Argentina, number one, because of inflation and how restrictive it was for the people of the country to get access to strong fiat money. We're seeing a lot of people using crypto as a source of, preventing their wealth to get away from them in some sort of saying. We're seeing a lot of usage around remittances as well in Latin America, in countries like Nigeria, Indonesia, Malaysia. We're seeing a lot of usage of stable coins, which is not necessarily the reason why crypto was invented, but then at the end of the day, it's the use case that is having the most adoption and most probably what's driving the Web3 ecosystem today as well. And that's 100% different from markets like the US or Europe, right? Where we see a lot more of that usage, I would say at the end of the day, more towards either DeFi or specific things like, I don't know, NFT, for example, or more speculative things to do, but not necessarily tied to stable coins or remittances or day-to-day usage. It's a different beast, 100%.
Great. Thank you.
Sure. Yeah, so what we see in here is that crypto is not a niche anymore, right? And both the private and the public sectors, now they both see crypto as at least we like to think, a foundational of the future of finance. And for example, we're seeing major companies like PayPal building native crypto capabilities. And we're actually seeing like even political leaders talking openly about this. Back then it was only one small country in Latin America. And now we have President Trump, the president of one of the most strongest countries in the world, talking about crypto, and he's all pro crypto philosophy, right? So we think that's a huge shift from just a few years ago when the mainstream narrative for everything related to crypto was mostly skepticism. But then at the end of the day, the way we like to think about it, for this to really scale, we still need to fix that experience gap between crypto and just traditional money. So if you think about it, some of the numbers that we have from our research is that 88% of Americans have used mobile payments. And when I'm talking about mobile payments, things like Apple Pay or Venmo, for example. And when you ask them like, hey, can you describe us how you feel about these mobile payments? They say things like, well, it's easy, it's intuitive, it's visible in their daily lives. And then on the other hand, only 13% of that same people can say the same thing about crypto wallets. So that keeps pointing us in that there's a huge gap in the user experience that still needs to be solved. And that's something that Mercurio 100% focuses on. Next slide, please. Now, deep diving a bit on Mercurio. And how Mercurio fits into all of this, right? Mercurio is currently the number 2 crypto payments provider in the world, and it's currently the market leader in Europe. It has built a user base over 5 million people, and I'm proud to say that 85% of all the transactions in our platform, they are coming from repeated users, which means that we're actually building something that is solving real problems for them. It's not just something that they are experimenting and then they never come back. And the idea behind all of this is that we are trying to make the crypto experience invisible as possible for them. So people, they don't have to think about, I don't know, things like seed phrases, which is complicated, network IDs, which is complicated. We want them to only think about paying, sending, and then receiving money like the same way they would with any financial app. So something that I think is worth asking at some point is, why is visibility so powerful? And I think because at the end of the day, if only 15% of the people say that they have seen someone else using a wallet, a crypto wallet in real life, what that actually means is that there's still a lack of social proof. And the lack of social proof and not being able to see someone else use a specific product is one of the biggest blockers for that mainstream adoption of any technology, not necessarily Web3, but if you haven't seen anyone using a product or a specific technology, in this case, a wallet, that's something that triggers you. I wouldn't say not to use it, but at least not being interested in giving it a try. Next slide, please. Now, one of the things that Mercuryio is most proud of is how is the business model, right? And how resilient, I would say, that business model has been over the years. Think of it, while the rest of the market was dealing with the ups and downs of cycles, specifically in crypto, which are super volatile. I'm pretty sure you guys know everything about that. And if we think about, FTX, the Luna Terra situation, or 3AC, I don't know, you name it. When all of that was happening, Mercurio reached break even in May 23. And we are talking when Bitcoin was around 30K. And it's now sitting in around 110K. But I don't think it's about bragging about break even. I think this is just telling something that is very crucial, which is two things. Number one is adoption, and the second thing is revenue growth. They are not necessarily, at least we like to think, tied to bull markets and market sentiments. They are actually tied to solving real user problems. And when you do that, we like to think that people is going to keep using your product regardless of what the market conditions is. And something that we think a lot is like, if adoption would only rely on prices and where Bitcoin is standing today. I'm saying Bitcoin because it's the most relevant one, but any other digital asset, what their price is today, why still around 90% of Americans use mobile payments apps regardless of market cycles, but only 10% of those use crypto wallets. And we think because it's clearly the user experience that matters, and it actually drives more adoption than market conditions. Next slide, please. And then partnerships and our relationships with our partners. Like I said, I'm leading partner marketing, so this is hitting very close home. Our partnerships are 100% another huge part of the story. Mercurio works with over 500 merchants. Think of everything across, I don't know, wallets, exchanges, NFT projects, fintech platforms. And then that ecosystem means that we're not just a payment provider for them, because at most of them, we are part of the, we're a huge player in that crypto economy. And every time someone buys, I don't know, an NFT, for example, every time someone swaps a token in a decentralized app, or they fund a crypto wallet, Mercurio is often behind those transactions, but it's playing like a infrastructure provider, right? And because we're deeply integrated in that user experience, we also get early access to a lot of high growth projects and user flows that most of the companies never get to see. So think about this way, and this is something that we're seeing: if the vast majority of users still prefer to, for example, trade, right, on exchanges, whether your preferred exchange might be, you name it, Bybit, Binance, Coinbase, Robinhood, whatever you're using. If the majority of users rather do that through one of those changes instead of actually using their own wallets. What's the main reason behind it? And our experience has told us that it's because users trust what feels familiar and what feels integrated to them. So that also drive us to tells us how powerful partnerships are for us and how relevant it is that Mercurio is embedded in experiences of their day-to-day lives. It's not something they don't need to go to any other app in order to interact with us. They stay in one environment that they're already familiar with. Next slide, please. Now, when we're talking about that network, we like to think that the effect, they go even further. We like to think that through our partnerships with large ecosystems, we do have access to 30+ million active wallets and more than 3,200 apps. And the way we think about that is it's not only reach, it's not vanity metrics. I think we think of it as a distribution power at the end of the day. This network is what is allowing us to test new products, to launch new features, and to help our partners scale their businesses as well. And then at the same time, it also gives us front row seats to how users behave. And through that front row seat, we are seeing one thing that is very clear is that like I was saying before, like users engage more when crypto feels like a feature for them, but not necessarily a separated product. I don't know if you guys can participate or not, but I wanted to ask you a question. It's like, how many of you? Yeah.
Yeah, and I'm a little confused, and it's not from what you're saying specifically. It's about the market segments that you're referring to. Like 2 or 3 slides ago, you were talking about all consumers that have wallets. And the last couple, you're very much focusing on those people that live in the crypto world and providing services to them. A regular person that doesn't live in the crypto world doesn't care about any of this stuff. They want to have a wallet that's convenient, but also can have access to crypto when they feel like doing something. So I'm a little confused as to which market are you really aiming for?
What do you mean by aiming for?
Are you looking to be we have to your customer base, your core customer base to be, we have access to everything you could possibly want in the crypto world, all through one convenient access point? Or are you looking to be, we want to reach the other 90% of the world that doesn't really care much about crypto, but wants to dabble every now and again? Those are very different worlds.
Yeah, got you. Feel unique. Ideally, the 99%, the other 90% that we're not reaching right now. And we like to think that that's what's going to drive adoption. And that's where the market should go. We think that we are, like I said, on this super early stage of adoption, but there's still a lot of work to be done.
Okay. I mean, this is fascinating, but they're not going to care about any of the last couple of slides. Just so. But you're absolutely right before. It's about convenience for the customer, making it easy for the regular customer. People that are really into crypto and really into blockchain, they don't mind if it's inconvenient. They want the service, but regular people, they need the convenience. So you're absolutely right on that point.
Thank you. Appreciate it. Where was I?
You were about to ask Julian about to some question to the audience. You're gonna make us participate.
Yeah. I was gonna ask you guys, has any of you guys have seen actually anyone using a crypto wallet to pay for something in real life? Any of you here?
You can respond, and you can use the chat if you want, just to respond yes or no.
I don't know how many people we have. We have 1 no, 2 nopes. Okay. Nope. Okay.
Yeah.
Okay. That makes sense. Because from what we're seeing from our data, only a little bit over 15% of people have seen it. So that's why we think at the end of the day, visibility is still the missing link here. Like I said, a lot of things are very complex, very confusing. And in order to generate that mass adoption that, for example, Nick was touching on, we need to make that user experience a lot easier for them. At least that's the way we like to think about it.
Julian, can I also ask you a question? I'm sorry, I was a bit late. But just regarding what Nikki said, in my experience at least, I don't feel a lot of like merchant acceptance. So I think the adoption, like if I want to pay something in crypto, how would that work? So I think that it's a bit distance from the consumer base that wants like convenience. So how are you guys like working in the acceptance part?
I think the solution for that is the integration with credit cards and specific crypto credit cards. So anywhere, any vendor out there that can offer you either a Visa card or a MasterCard is pretty much accepted everywhere. So you can top up your credit card using a decentralized app, and then you can just use that card to pay for everything for your day-to-day consumers. Does that make sense?
Yeah, it does. I was like thinking that you also have like some direct payments like transfer or like a merchant checkout button or things like that, but with card that works too.
Gotcha.
Do you provide card services?
We do. That's on a few slides down.
Yeah, I mean, we're a payment chat, so we are interested in the payment side and how it works.
Got you. We'll get there. Appreciate the excitement for sure. Next slide, please. Now a bit on our footprint. We both compliance and regulation are often seen as barriers in the space. Mercuryo likes to think about those differently. We like to think about it as a competitive advantage, to be honest. Mercuryo is licensed in key regions, and it has established relationships with local payment providers, which means we can help crypto native businesses scale globally without necessarily hitting those regulatory walls. And I think this matters because, like something we were touching before, the next wave of adoption won't happen in isolation, but it will happen when these crypto-specific products can plug into the traditional financial system in a way that's very seamlessly. Something that we are seeing as well is that one of the biggest reasons that mainstream users still hesitate to try these type of products is trust. But then from the general population, or at least our market research is showing, is that only 45% of the lower income users report that they had positive wallet experiences, right? It's very painful. It's still not there, and we get it 100%. We're not saying it's a great experience. But the key takeaway for us is that it's showing us how crucial safety and reliability are for next phase, and how crucial that user experience is going to be as well. Next slide, please. Okay, a bit on Mercuryo's fundamentals. Pretty strong revenue, has grown a lot, almost 300% between 2022 and 2024. Company is on track to 6 million this year. And what's important here isn't just the numbers, in my opinion, at least. I think it's the fact that our take rate is expanding, that the margins are improving, and that the growth is happening while we are investing in things like compliance, partnerships, marketing, new products, education. We like to think, in other words, that we're not just growing, and that we are building something here that is actually sustainable. We do not believe that adoption is about technology alone or technology itself. we think that people will adapt crypto, and this is something we were touching on earlier, when the value is clear, when the value is visible for them, and when that value is aligned with their everyday lives.
I've got a question. Where does your revenue come from?
Sorry?
How do you generate revenue?
Core product, on-ramp and off-ramps. And fees, of course, fees from those on-ramp and off-ramps.
Okay.
Yeah. Next slide, please. So we like to think that we're just getting started. Over 300 new merchants in the pipeline, expanding into new verticals like crypto credit cards, something that we were touching earlier, and a few other things. We think the next phase is about scaling horizontally, adding new revenue streams and building relationships that are actually stronger with our partners. Right now, I think it's somewhere around 80+% of wallet users are saying that both fast and easy on-ramps are important for them. And that's why we think like products like Spend, which is something that I wanted to get into, are so important for us to unlocking that next wave of users. And I think this is going to also be tied to the Fernanda's question as well. So next slide. And this is something I wanted to touch, which is Spend, which is our newest vertical. Next slide. Yeah. So Spend, for us, one of our most exciting launches. Few things that we know so far is that about 30% of people don't use crypto simply because they don't know how to spend it. They don't know what to do with it. And we like to think that the Spend credit card solves that problem, and it gives the user a simple way to use it, a familiar way to pay with crypto, and they can do all of that through a decentralized card. I don't know how many of you guys are into crypto, but there's two ways to get this card, at least from Mercuryo. It's not the first card, it's not the only card in the space out there. The one specifically for Mercuryo, you can do two things. Either you get it from Mercuryo itself, or you can get it from a partner. Let's say, for example, if any of you guys have a Ledger wallet, if you ask for the Ledger credit card, that's actually Mercuryo's card behind the scenes. And our research is showing us that the number one feature that new users say that they want or that they expect from us is simple peer-to-peer payments or fiat transactions. It's actually not DeFi, but it's something a lot more simple. And I think this is tied also to what Fernanda mentioned earlier as well, right? And that's why we think that Spend and all the other crypto cards in the ecosystem are actually hitting the right need here. Next slide, please. Okay, now Spend does three important things. Number one is it turns wallets into profit centers. Number two is it helps merchants build ecosystems and revenue streams around payments. And third thing is that it opens the door for, at least we like to think, for merchants to evolve into full-scale neobanks, as per se, with us as their infrastructure partner. We believe it's about making crypto spending as natural as possible, as tapping your phone at a checkout, and that's it. You can add it to your Google Pay, or I think it's Android Pay. But then at the end of the day, remember that adoption is only going to grow when crypto products fit into existing habits. And at the moment, like I said earlier, around 10% of the people feel like wallets do. And we believe that products specifically like crypto credit cards is something that is going to be able to change that, in which you can top up your card from just any decentralized app and just pay on your local merchants.
A quick question for clarity.
Yeah.
You mentioned a few slides ago merchants and referred to them as other companies or organizations within the crypto industry. For us in the payment industry, merchants are stores, whether online or physical. Are you referring to merchants as stores where you're purchasing from them here, or are you referring to the crypto world?
Both, depending on the product. We do crypto processing, for example, in which you can get paid with crypto, and also traditional ways. So yeah, both.
No, I was asking what you mean by merchants. Are you talking about the store down the road? Is that what you refer to here?
Yeah, like the stone down the road that you can pay with your crypto credit card, for example. And then if you have your own business, you can also process crypto payments. That's what I meant.
All right.
Right. Next, please.
I have a question. What do you think is the main pain point that merchants actually, when they are trying to include or trying to integrate crypto in their operations, in their payments, what is the main pain point that they have like nowadays? Like if they made the research, they took the decision of like, okay, I wanna just integrate crypto like as a merchant. What do you think is or what do you see like from the perspective of Mercuryio when they are trying to do that? What is actually the main pain point for like getting into the space?
We believe it's complexity for them. We believe them believing how complex this process can be. And don't get me wrong, a big part of that is because of the lack of education coming from companies like us, which we provide this type of products, which is something that we're working on. It's not necessarily that complex, and it's definitely something that we need to tackle in order for those merchants to be aware that it's not necessarily that complicated for you to work with it. Yeah.
Okay, great.
All right. If spend is basically a credit card or debit card, then most merchants already accept them. So I'm assuming here you're referring to merchants accepting crypto directly as a payment. Is that right?
No, it's converted to fiat. You top up the card with crypto and it's converted to fiat automatically, and you pay in fiat.
In which case, what is the service to merchants? Because merchants already accept a MasterCard or Visa card.
It's crypto processing that you can get paid. It's different product. One product is Spend, in which you top up that product with crypto and you pay in fiat, and the merchant gets paid in fiat. And then there's a different product, which is crypto processing, in which as yourself as a business, you can get paid by crypto, and we help you process that payment.
Okay. So it's a payment in crypto.
Correct. Both, but they are different products.
Yeah. Okay.
Gotcha.
One question. This is Daniel. Can you hear me okay?
Yeah, perfect.
Yeah. So following on that point, when a user uses the card to purchase, let's say a large screen TV, $1,500 for it, is there then a on-off ramp surcharge, and who pays for that surcharge? Is it the cardholder that's absorbing that cost, or is it the merchant who's taking care of that on-off ramp cost, or how is it split? And how is it? And then also, how is it transparent to both parties? Where's the transparency?
It's depends, but it's mostly paid on by the user. You have top-up charge, for example, and all the fees that we're charging are 100% open to all the users.
Okay, but on the top of, I understand that you would charge something, but when you're spending with the card, is there an off-ramp conversion cost, and who pays for that cost?
Yes, Mercurio charges 1%, and that's paid by the customer as well, the user, end of the day.
So there's a 1% convenience fee. It's almost like what some cards charge when you're doing an international transaction across other currencies. That's costly.
Industry standard for crypto is between 1% and 2%.
Yeah. Okay, got it. Thank you.
Yeah.
Okay. I have another question. Sorry about this. So if you have a merchant that signs up and they will now accept a purchase payment in crypto, so it's not going through Visa or MasterCard, it's a direct crypto purchase. Is there a purchase guarantee included in that, the way that a credit card transaction has purchase guarantees included?
That's a great question. I don't have the answer, but I can find it for you.
Okay.
Actually, my question was going to go this Veronica High in a similar direction about reservations that you do on the card and how that works for the wallet, where you already in crypto basically execute the transaction.
Sorry, I didn't follow.
Like when you do a credit card payment, often it's a reservation of funds, like you go to a hotel. How do you translate that on the wallet side of crypto? My understanding is that on the blockchain type, you always immutable already execute. So how do you handle those?
Not necessarily. The blockchain, the only time the blockchain enters the process is when you top up. When you top up that credit card, you can top up using different blockchains. The blockchain that you rather use and where you have the funds, but then everything happened off chain, not necessarily on chain.
Got it. So if I have a reservation amount, I basically need to top up my card first.
Correct.
Okay, got it.
Okay.
Got it.
So
that's smart.
All right. So I'm confused again now, because that's all purchases are on the card. But you were talking about merchants accepting payments in crypto itself.
Different product.
That's what I'm saying. In that, we all know how cards work. I mean, we're all in the industry at two different levels. But the crypto purchase or a crypto payment, what kind of, that's what we're asking about, is how does that relate to the kinds of services that a card offers, if it's not going through the card rails? So things like pre-auth, which Veronica was talking about, or variations of that, and dispute resolution, purchase guarantees, all of that kind of stuff.
Yeah, that's crypto processing for us. I do not have the answer from a technical point of view, but I can get it for you and definitely share it with you later.
Okay.
Is that okay?
Yeah.
All right, cool. Then, okay. Now we can move into the next slide. Next slide, please. A bit about our team for you guys to be aware. We don't think any of this happens without the right people. Mercuryio is a 300+ people company. Deep expertise, payments, compliance, risk, product, marketing, and we believe it's that experience combined with the backing of top investors, what at the end of the day is going to move and make us scale fastly and with confidence. Something that might be relevant for you guys, if we move to the next slide, please, is more related to the quality of the service. Our user experience, we like to think it as another differentiator. Again, buying crypto on Mercuryio, and what I mean by buying crypto on Mercuryio is the on-ramp product. It takes only just one step, and it's 10 times faster than our closest competitor. On the other hand, our customer support team responds in average around 30 seconds. And we are keeping an 88% customer satisfaction rate, which is something that's well above industry benchmarks. And we like to think that the result of that is that actually users trust us, and that trust is what keeps them coming back. And that's why we were seeing that around 85% of all the transactions are coming from users that have used our products in the past. It's not just one time they're testing and they just go away. And then I think something that's relevant here is that once a wallet has been set up, only about 25% of people feel confident about using it. So that's why we think at the end of the day that a seamless user experience and something that's and a customer support that's responsive for them is something that really matters and something that will move the needle and that would make us make them choose us. Next slide, please. So a bit on our tech here. Tech, it's pretty much designed to scale 100%. It's modular, customizable, and built to handle 5 times increases in volume. We've invested a bunch of hours into building this architecture, everything from optimized blockchains integrations to industry-leading fraud prevention systems. And that, at the end of the day, we think that investment pays off every time we help a partner grow as well. Next slide. And then to wrap it up, I want to be conscious about timing here as well. I would like to just leave one thought with you guys, and that's the way we like to think about it is that the next phase of crypto is not about building more necessarily, because there's also a conversation in the space about how many apps are out there and how many use cases are out there, and we don't necessarily think it's about it's a quantitative conversation, and it's more about quality. So we think it's about building actually something that's better for people. It's not actually building more. We like to think about how these products feel familiar for them, how these products can solve real problems, how they fit into our daily lives. And we like to think that's the bridge Mercuryio is building. And that's why we like to say that, we building that bridge between traditional financial systems and the world of Web3. We believe that wallets, they won't scale if they still feel like a new category, and they would actually scale when they feel like a better version of what people is already using. And that's something we are seeing with the adoption of different technologies in the tech space. And this has been over for years. It's not necessarily related to Web3, and we think that's something that definitely needs to happen. It definitely needs to become a better version of what people already use. At the end of the day, think of it this way: crypto, Web3 specifically, is still an experiment. We don't know if this is going to become successful. It's going to overtake the traditional financial system. We certainly hope so, because we think it has more solid foundations, or at least more fair foundations, we would say. And we are seeing clear signals of adoption, especially, like I said, on stablecoins, on remittances, on countries becoming more pro crypto. But then at the end of the day, everything that's being built here is around experimentation. Hopefully, we will get somewhere which is better than what we have today. But I think that's something that only time will tell, regardless of how many adoption signs we're seeing at the moment.
I have a question.
Yeah.
You mentioned on the previous slide that you're building your systems for 5 times growth, like transaction growth. What's your current transaction volume, roughly?
I think I said it in one slide at the beginning. I don't know if we can go earlier.
That's a rough idea.
I don't have it from the top of my mind, Nick. But if we go earlier in the slides, maybe we can find it. earlier. No, that's before spend. I can get you the exact number if you want as well, Nick. Is that something that would help?
Yeah, it would.
Yeah, sure. Happy to get it for you. All right. Any other questions?
Yes, Julia, I have another question. From your perspective, how do you see, like, in the last couple of years, the relationship between traditional players in the ecosystem and Web3 native companies? We know that they are like different worlds, completely different worlds, that back in 2021 it started like being a huge difference on the way how traditional players handle, like yeah, I mean, the businesses, like the deals, the focus and the vision of the market on what's going to happen, or what was going on with the crypto ecosystem. And now, from my perspective, from my point of view, we are seeing like more integration and a seamless like interaction between Web3 native companies and traditional players, and traditional uh, players, like, yeah, we can talk about banks and traditional players like big banks and big merchants. Do you think that that is changing? Or how do you see that from your experience?
Yeah, what we're seeing is that it's changing 100%, and it's in line with same thing with policymakers. And I think that this is something we touched early on. We are seeing major financial players actively tapping into crypto, either through acquisition or either developing their own technologies. And I'm thinking about Stripe and Bridge, right? For example, Robinhood and Bitstamp, and that kind of examples. So we are seeing them actively tapping into. And then on the other hand, I think, like I said, it's very aligned with policymakers and that sentiment, and how that sentiment is shifting into being more supportive of crypto integration, of the integration of crypto into the financial system. We went from, Donald Trump in 2021 saying Bitcoin is just a scam, to now, like, okay, or at least last year, making sure that this state is going to become the future of crypto, and Bitcoin will be made in the US, if that's something that's even possible. But we are seeing a shift into, yeah, definitely either acquisitions, development, or that sentiment from policymakers becoming increasingly supportive of crypto integrations into the system.
That's great. Very interesting. Thank you.
Yeah, of course.
Julian, two questions for you, if you don't mind. First question, are you paying rewards or quote unquote interest on balances left in crypto with you? And second, very different question, are you issuing your own a stable coin denominated in local currencies today, and/or what's your outlook for looking at that? Even some of the announcements in the industry, like Stripe's announcement that allows people to kind of mint their own stable coins very quickly and effectively. Thoughts on that?
Yeah, great questions. The answer is no for both. We're not paying any rewards, and we are not working on developing our own stable coins. That being said, we do work very closely with partners that issue those stable coins. And I'm talking, I don't know, more specifically about Circle, for example, right? One of the major players in the stable coins ecosystem. We work very closely with them. We are part of the what's being called the Circle Alliance. It's a partner that we mutually support each other on growth and different initiatives. But there's no plans on our own stablecoin. Yeah.
Understood. One last quick question. Will you be at
Yeah.
Money 2020?
No, not me. But someone from the company will. So more than happy to connect you with that person. I think
That
the
would be
head of
great.
US, we have a head of US who lives in New York, and I believe he's going to be attending. So more than happy to connect you with him for sure.
Perfect.
Where you
I'll
work,
ping you separately.
by the way, where you
Thank you.
work?
I'm an advisor and consultant to a number of fintechs and banks in the US, Latin America, and Southeast Asia.
Okay.
Spent about 30 years in banking in the Americas and left banking about 4.5 years ago, and I've been advising and consulting since that.
Nice, interesting.
Yeah.
Cool. Yeah. If you can just send me your email, or I can ask
Will
the
do.
guys from PCMI after,
I'll
and
ping
I'll get
you.
in touch with them for sure.
Perfect. I'll ping you via LinkedIn later on. Thank you. Great
Absolutely.
presentation, by the way. Thank you.
Thank you.
Julian, I also have one question, just like
Yeah.
I know you're almost running out of time, but just one final question. You have a
Yeah.
slide where you have like your global presence, and then you put like that you have like 15 local payment methods, like PIX and things like that. So how does that relate? Is just for the top up of the wallet? So you use, for example, local payment methods to top up your wallet so you can pay using the crypto credit. Is that it?
Yeah, that's correct. I think you're talking
Okay.
about the global footprint, right? And when we have that distribution in Europe, North America. Yeah, that's correct.
Yeah, because then you have like local payment methods, and I was like wondering how does some of them relate to your product? So it's basically for the top up, right?
Correct. It's our main product. Our core products is on ramp and off ramp, and then I would say the second most relevant one is the spend card. So yeah.
Okay. Any more questions? No? Okay. So guys, thank you so much for joining us today. I'm sorry I was late, but thank you, Lautaro, for starting this coffee chat. And Julian, thank you very much for being here with us today. We see you guys next month